Hi, I'm Brent Clanton, executive producer for the Lance Roberts Radio Show and podcasts. Welcome to our Monday Midday update for April 1st with a glimpse behind the scenes at what we're working on for you. First up, RIA Advisors Chief Investment Strategist, Lance Roberts.
One thing that we're working on today is two things. We've got an article out already this morning talking about, is the stock market confused about what's going on? This was kind of one of the premises that, people have been looking at. The stock market's been doing very well in the first quarter. And of course, there's a lot of economic data that's not showing, such a good sign. So a lot of people have begun to discount what the market's saying, and that's a danger. Historically looking back, if we take a look back in history, and this is what the article does, it looks back in history and says, well, how accurate is economic data versus the stock market? What's a better indicator of a recession? Stock markets or economies or economic data? Well, historically, hands down, what you find out is that there's two indicators that are the best leaders of impending recessions. One is the stock market. Now, it doesn't mean the stock market's going down. It means that the stock market is having trouble going up. In other words, it stops advancing and begins to what we call top or consolidate. And that's what's been going on now for about the past year and a half. The stock market stopped going up. It's been just really going in a big sideways pattern for the last year and a half. That's typical that you see prior to the onset of a recession. The other is the inversion of the yield curve. And we have been talking a lot about that here lately, but we have numerous different versions of the yield curve, depending on which ones you're looking at. About 50% of them are now inverted. So that is also a good leading indicator of recessions coming up. So, and again, it doesn't mean that you should panic and go hide in cash and, bury your gold in the backyard. But it is worth, particularly if you've got money invested in the stock market, your 401k plan, etc., to at least be paying attention to these things and have some type of strategy or basis in place to protect capital in the event that we start to have more significant signs of economic slowing. And that's very possible. Look, we've had 10 years of an economic advance. We've got a tremendous amount of buildup in credit. A lot of that credit has now slipped into what we call, sub-investment grade territory. In other words, junk territory, more commonly known as high yield. And those are early indications that risk to both the economy and the markets is elevated. So, this is why that, for investors, looking simply at a lot of the headline data, what happens, in the markets from one day to the next can be a little bit misleading, because it can confuse you as to, well, the market's doing well today, so obviously everything is okay. Well, again, you have to look at longer term trends and pictures to really kind of understand, because the economy is like the Titanic. It takes a long time to move a $21 trillion economy in one direction or the other. It just doesn't happen overnight. So that's what we're working on today, as well as I've got an article coming out tomorrow talking about three things that you often see said at the peaks of market cycles. And we're seeing a lot of that right now. So that's what you want to be paying attention to. Those will both be on our website. The article on Is the Stock Market Confused is there now. Simply go by realinvestmentadvice.com, get that article. And then tomorrow we'll be sending out to all of our subscribers. If you subscribe to our website, you'll get two emails from us a week. By subscribing to our website, you'll get our weekend newsletter, which is out. And we'll also get our Technically Speaking post on Tuesday, which talks about the markets from a technical perspective. So if you're interested in that, get by the website, just simply click the subscribe button and we'll add you to our email list. And no harm, no foul, no obligation. We don't share that list with anybody. It's simply for us, and we email it to you. So we'll take good care of you that way. Make sure you're on track.
Thanks, Lance. Also on the website this week, John Camarianos' first quarter wrap and Richard Rosso's money tips for kids and how to talk to your kids about money. Jesse Colombo has been furiously writing all weekend, and you won't want to miss his work on Turkey's unraveling credit bubble on our website, riaadvisors.com. Our next Retirement Right Lane class is coming up April 13th, and we'll be holding this session here in our office on the Katy Freeway. Complete details and registration links are online at riaadvisors.com. And you never know who's going to show up. Look who's in the studio with us this morning. Me. No. How's it going?
Good. Canberra, Marshall, KPRC. I've been there for about 20 years now, and haven't been here before, so this is now, I can scratch this off my bucket list.
That's right.
Yeah.
I hope to see more of you.
Yeah, it's a good thing.
Thanks for coming out.
Okay, my pleasure.
All right.
Good.
And we'll see you in the morning on the Lance Roberts Radio Show starting at 6 a.m. Central Time on KSEV AM 700, the Voice of Texas, streaming live on Vimeo, YouTube, and Facebook Live. I'm Brent Clanton, executive producer. Thanks for watching.